Hey traders, it's Danielle, and today I'm going to be telling you about a setup that I'm eyeing in Microsoft. So, Microsoft is within a stone's throw of the previous all-time high, and typically with relative strength stocks like this, you can generally just keep trading them up into that new high and then up to your next price target as long as the strength in the market holds up, which it is. So, I know this is a little bit extended here. I know it's at a pretty crazy move after earnings, but those new highs can be magnets. And what I like to do is I like to look for lower time frame squeezes to use those to trade them to a new high. So as you can see on this weekly chart, the overhead price targets are going to be 500 and then 550. Those are going to be, however, longer term price targets. So when I'm trading something in the options market and I'm looking for a lower time frame setup, basically I'm just going to look for a lower price target. So for example, in this chart, we have a 195-minute squeeze and a 78-minute squeeze. And when you look at this chart, you can see, you have 462.52, which is that most recent high, but we already talked about the fact that 468 was that higher high, right? So in this instance, if this 195-minute squeeze fires to the upside, which it looks like it will, given the bullish trend, the fact that it has bullish volume, your next price target is really going to be 480. That's going to be the key psychological value, and it's also going to be just above that previous high. The other way that I got to that price target is through the options chain, because when you look at the options chain, specifically going to the monthly expiration series, you'll see that you have about a $16 expected move in that time frame. And when you look through your options chain just to see, where's the high open interest, where's the magnet price, you definitely have 478 as a magnet price because you have 18,000 contracts. Sorry, 475. You have 18,000 contracts here. And then, 480, you also have 10,000 contracts here, and 490, you have 18,000 contracts. So when you're trying to decide which one you should use, you want to go with something that's reasonable. So if you're trading at 462 basically right now and you have a 16-point expected move, you could definitely be at 475 in 18 days. So I went ahead and picked that for my price target. I went ahead and set up a butterfly. The first strike is just barely in the money at 460. The next strike is at 475, and then after that 490. That's because this is a $15 wide butterfly. I got in for $4.63. It's already up just slightly, but essentially what I'm trying to do with this is I just want to see it trade, above 460 and up into 475. So that's my price target. That is the time frame that I'm using on a shorter term basis in the options market, and on a long term basis for my long term stocks, I'm eyeing 500 and then 550. If you would like to come trade with me, you can come join me in the options room at Simpler Trading. We call this the Mastering the Trade room. You can check out the link below the video, and you can see everything about what we offer: live trading alerts, daily videos, learning center, premium newsletter, Simpler Essentials, which is our options 101, where you can binge watch videos. And then you can also unlock exclusive bonuses, which include my grid and a class that I have taught on butterflies called Stack Profits. So if you want to learn more, click on the link below, and I'll see you in the next video.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe, and also give us a like and comment down below. If you want to learn more about us, and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com, where you can join us for more info. Thank you very much and have a great day.